You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I love the miners here. I own GDX. In fact, today I took my first profit on my GDX trade, almost 6% on the first half. I'm letting the second half run. I have a boatload of it.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, checking in with my friend, master trader Nick Santiago over at MiningStockEducation.com. Nick has a trading service, both stocks and options, and he runs his own money. And he's been doing this for over 30 years. So I like to get his perspective, a trader's perspective on the markets, but in particular, gold, the miners, and commodities. So Nick, welcome back onto the show. Let's start with silver. Last time you were on the show, you said if silver gets down to $18 an ounce, that could be your buying opportunity before you expect a steep runoff. Now, about a week ago, it hit about $18.50. So I did have your thoughts kind of running around in my head. What do you make about that run down to $18.50? And of course, it's popped back up since then.
Yeah, it's gotten very close. And I did not jump on board as I'm a stickler for price. I always have my numbers exactly calculated where I want to get in. So I missed that so far. I think we'll get a chance at it, though. I think we'll get a retrace back down, a slightly lower low, and then jump on board. I believe silver is going to be the trade. It might even be the trade of the century. And I don't say that very often. So I love silver. I even love it now. But I really have, was waiting for that $18 pierce. I thought that was going to be it. And it got very close, as you said, and then it just popped. So I did not get that. I got some others, though, and they're really doing very well.
What about GDXJ? How do you see the miners performing relative to the precious metals?
I love the miners here. I own GDX. In fact, today I took my first profit on my GDX trade, almost 6% on the first half. I'm letting the second half run. I have a boatload of it. I love it all the way up to the $30 area. I think GDX is going. As for the junior miners, they have a tendency sometimes to outperform the bigger miners. So if you want to take on that added volatility, you can do so because your reward will be bigger. They usually will trade together. But for me, I like to stick with the big solid companies. I love those. Right now, one of the trades I love and I'm in is Newmont Mining. And I've been pounding the table. I got in on that, and I'm already up about 3% on that. So I love the miners down here. I think this is your opportunity. It's not too late either to get involved.
And you buy the stock itself or the ETF? You don't buy the options on these two names?
I did buy the options on both of these names. Okay. I also own call options on Agnico Eagle Mining as well. And I own GDX, the ETF, outright, and I own Newmont Mining outright, and a fair amount of it. So that's putting my money where my mouth is. And, so far they're starting to perform. Newmont got hammered after earnings, which it went right down to a level I had told my trading group that it would go to. I said, we don't know. I don't want to get in this early because I just don't know what's going to happen after earnings. And the stock got absolutely pounded. And that was a gift. They put it right on our lap and we bought it up. And I also did it with call options as well. So far, so good.
Now, I know you don't look at fundamentals, but the market likes Agnico Eagle and what they reported more than Newmont. Did you pay attention at all to that?
I couldn't even tell you what the earnings were at all.
Oh.
I just know that it's always about reaction, right? I always tell my trading group, don't worry about what the numbers are. It's always about the reaction. Years ago when I got into this business, GE, General Electric, was a popular company. And I used to always ask people, why are they always beating by just 1 penny? A quarter after quarter, you would see these guys beat by a penny. And, the revenues are always in line. I just said, this is like a rigged game over here with these earnings. These guys can make these numbers say anything they want to say. And I just gave up on it. And to tell you the truth, it was the best thing I ever did. Over 25 years ago, I haven't looked at a single earnings report. I can't tell you what a company does, as far as their revenues are concerned, or the EPS, or the EBITDA. I could care book value. I could care less about that stuff. It's always all about the chart.
But do you compare within your portfolio? So, for example, just a relative comparison between Agnico Eagle and Newmont is going to show you that the market likes Agnico better.
No, it's just Agnico. Agnico Eagle is down ahead of the earnings announcement already because of Newmont. or maybe it was just down in general because gold miners had been so depressed. Right. And then when the earnings come out, they're better than expected. Just for instance, and it doesn't matter if it's gold miners or anything else. Just look at Apple, the worst earnings they have ever reported. Look at Google, the worst earnings they ever reported. Amazon, the worst earnings they ever reported. Microsoft, the worst earnings they ever reported. And all of those stocks went up because they were better than expected, right? So that's the game here. It's a game, and you got to just treat it that way, almost like a glorified video game. When stocks are depressed, the news is almost always factored in. So if they come out and they're better than expected, the stock will get a move. Another example today is Uber. Uber's numbers were horrible. They're not good numbers. I mean, I'm just looking at the headline from what was on CNBC today, but they're better than expected. So when the expectations are so low and you come out and you're better than expected, you get a bid, and that's all. I don't think Agnico Eagle is better than Newmont or Newmont is better than Agnico Eagle. I just think that Newmont was still elevated, had not fallen enough into its earnings report, and then it did. And I wait 5 days later and I scoop it up.
All right, let's talk copper and its proxy, Freeport, McMoran, which you pay attention to, FCX, down about 50%, like in the last, since April-ish. I mean, that's a pretty dramatic move. Is it tantalizing to you here at these levels?
Yeah, I mean, for a bounce it is. I think copper has gotten a good bounce along with the market, and, Freeport McMoran will follow that as well. But, copper still has another leg down. And I think everybody just has to remember this is just a counter trend bounce in copper. Copper is heavily related to the construction industry, home builders. Jesse Livermore used to say all houses are built with copper roofs, meaning follow the price of copper and that'll tell you what the market's going to do. Copper hit a significant level. It was due for a technical bounce, rebound. It did that, but I do think we're going to have another leg lower in copper, probably down to around 290 or so, and that will probably lead to another buying opportunity. But I wouldn't chase copper here. It's already had a nice move.
What about oil? Oil under 100? Do you have a buy target on oil?
Oil's going a little bit lower. I do have a buy target on oil. It's going to be somewhere around $83 to $84, maybe $81 to $82, because commodities have a tendency to overshoot levels a little bit. So I love oil down there. I'm going to be a buyer of oil down there around 82 to 83. And then it's off to the races too. I'm not even looking to sell it. I'm just looking to hold it for as long as it'll hold on. And, what I like to do, my style is to take half off the table like I did with GDX today. I took half off the table and I let that second half run. And if, we get good bullish patterns, I might even add to a position to that. But right now, when I look at oil, 82 to 83, maybe 84, it's a buying opportunity and a long hold it for a long duration.
As in, what's long for you? Because you're a trader. Is that 1 to 2 years?
This one could be 1 to 2 years. Yeah, this could be a long. Same with gold miners. If gold miners don't come back down, they could be a long-term trade as well. So I mean, right now I'm looking at that as a really big possibility. These have put in significant lows. They hit all my levels. I haven't had a gold mining buy signal like this I can't even tell you, since probably 2020, March 2020, April 2020. So, I love gold miners here. Gold, I think it's a technical bounce. I still don't love it yet, but oil, I think this is a 1 to 2 year trade out. I mean, this is where you can make some big, big money because there's no alternatives. All the greenies could put up windmills all they want. These things are not going to hold things together. So, unless the economy absolutely craters and falls apart, which it's a fair possibility could happen, I think you get into oil at that level for a long-term hold.
So you referenced the significant buy signal you got for the gold miners. What goes into that, Nick? Is that just more intuitive? You just see it in the chart pattern, or is there concrete data that you analyze?
Yeah, it's all about the chart for me. It's all about the chart and it's about time. So when I look at the timing factors that are involved, it told me late July, early August is going to be the time where gold miners should go. When that time can match up with the price that I was expecting, which was around $25 for GDX, I'm going to use that. That's it. When I get a those two combinations come together as one at the same time, it's a very, very powerful move that I'm expecting. So far, so good. And, right now it's working. And I think there's a lot more upside to come.
The United States Natural Gas ETF, UNG, rose close to 100% in the last 30 days. You see a parabolic move like that. Do you sell, or what is your analysis here?
Well, Nat Gas just went and made UNG actually just made another new high before pulling back. So it pulled back a little bit, but the fundamental backdrop, which I don't really care about, but with all this geopolitical stuff going on, the winter heating season is around the corner. We're already in August. Europe is going to need, I don't know if anybody's ever been to Germany or Holland. It's cold over there. I used to live there. So I will tell you firsthand, they're going to need some natural gas, and I would not be shorting nat gas. I'm hoping for one more sell-off. I don't know if that's going to happen. I was looking to be a buyer of nat gas around 450. And that's nat gas futures. So right now it's just wait and see on the pattern. But overall, I would remain very bullish on nat gas after a pullback. Right now, it's a little lofty still.
Nick, I've had analysts on the show, such as Mike McGlone from Bloomberg, and they are expecting deflation, reversion to mean with some commodity prices. Some would point to what's occurred recently in the agricultural ETF, DBA, and its pullback as one of the indicators. Maybe we're going to see a reversion to mean, and we could go into a little more deflation, not inflation. What would be your response to a position like this?
Yeah, I think if you get ag stocks to pull back, or any kind of stock like Mosaic, Archer Daniels, or any of these, they're going to lead to buying opportunities. They're not going back to where
there is no deflation. You're saying?
No, not right now. I mean, you got to look at what was just done: lockdowns, supply chain disruptions, money printing to the tune of which we've never seen before. A Fed balance sheet of $9 trillion. That's not easily reversed. I mean, these guys just
not with the Inflation Reduction Act, though, Nick. Come on.
Yeah, I mean,
more spending to reduce inflation.
Give me a break with that transformational vocabulary, right? I mean, it's just, these guys are clowns. I've never seen a show like this. The world is all a stage now. It's just it's a puppet show out there. It's really a banana republic. And when I look at this stuff, you got to just say, hey, if the economy can hold on and it can continue to rally, then we're going to go higher. But we're already talking about the Fed cutting rates again. I mean, this is a real topic. Look at what's happened to the 10-year U.S. Treasury note yield. It's already fallen back down, to almost 2.5%.
I saw somebody say they think it's going to go to zero. Do you think that's a possibility?
I wouldn't rule anything out. I mean, I've been looking for yields to go higher for so long. Finally, they did it. I have made money on the trade, but now I'm just shaking my head and I'm waiting for the chart pattern to tell me more. But you have to chuckle at some of this stuff that these guys are just raising rates, and the market's looking for them to cut already and to implement more quantitative easing when they just started to do quantitative tightening. So I just really think the next few years are going to be really, really interesting. And if you know what you're doing and you follow the charts, you'll be okay. I just wouldn't be a cowboy in this market. I think that's a fool's game, to just try to be a cowboy. But, just wait for the setups and be patient. I'm not looking to hit home runs here. I'm just looking to be a steady Eddie, just nice and even keel, make money consistently, and that'll do the trick.
Volatility trade, you were big on that a year ago. What are you thinking for the end of this year?
I got to tell you, volatility's been very hard. It's been very difficult because it never went as high as I thought it would have gone with the way the markets acted. And also when I look at volatility now coming back in, we're still above that psychological $20 level on the VIX. So it's been a little bit of a tough trade. I'm going to probably nibble into it at some point here, but I've really stayed away from it. I just don't like the way it's acted. It hasn't conformed to my calculations, meaning it gets very close to my levels and then it jumps. And I don't know why it's not hitting the numbers because I'm a very number specific person. So I don't know why it didn't do that. But, when things don't hit my numbers, I have a tendency to just leave it alone. And it's been a tough trade, but I do think volatility later in the second half of the year and even into next year will go significantly higher.
What's been your best trade the last 30 days?
Well, believe it or not, one of my best trades was not a good trade, but it was still a winner, and it was my best trade. When the markets were falling, I was looking for a turning point around the summer solstice using a Gann technique, and that pretty much nailed the bottom. And I was underwater an Apple trade. Apple at the time was trading around $130. I'm in at 147 and change. And I said, you know what? I can't stop out because this turning point's going to come and this thing's going to rocket ship up. So I traded Apple all the way up back to positive territory, sold it in the 150s and made money. So, turning a losing trade into a winning trade, I consider that a major victory because that would have been a significant loss I would have taken had I had to stop out.
Last question. What are you up on the year? In your two services?
Yeah, option service is up well over 100%. We got a lot of winners right now in the pipeline that I haven't taken profits on yet that I'm looking for more. And then the swings are probably around, I think we're up about 30%, maybe a little bit more than that. So pretty solid, pretty steady. It's not my greatest year by any means, but bear markets, when I look at some of these hedge funds that are down 30, 40, 50% and some more, I'll take it. That's good. I haven't done tons of action. I'm more of a trader that likes to take the moves on turns. And, one of the great hedge fund managers out there, successful ones, is Paul Tudor Jones. And he always said, the money is made on the turns. It's not made in between. And I'm a true believer of that. And, now we have a gold mining turn coming. We have, some turns coming, and then you'll get an oil turn coming. And that's where you take the bulk of your action on those turning points.
Is what you said consistent with those that say it doesn't matter if you miss the first 10% of the move, as long as you catch the majority of the move? Would what Paul Tudor Jones says be consistent with that philosophy?
Yeah, you can do that as long as, in a bull market, that's really, you can do that. In a bear market, because the rallies are so fierce to the upside, like this bear market rally, look at it. I mean, it's been an animal to the upside, right? You did some shaking and baking there in early July, and then we've ripped as the mega cap tech earnings have come in. So you got to just understand it's more. I think that philosophy is more adapted to bull markets. Bear markets, they're very, very tough. A lot of pro traders I know won't even touch a bear market. They'll just call it quits, sit it out, and they'll wait for the dust to settle. Because, if they get caught on the other side, when you get the counter trend rallies, they're so fierce.
All right. Well, Nick's website is InTheMoneyStocks.com. Go check it out if you like what you heard here today. Nick, thanks for coming on the show and sharing your insights. Much appreciated.
Thank you, Bill.